15 cities across South Florida are unraveling, and what's unfolding isn't just a rumor, it's a full-blown housing market crisis in motion. Behind the postcard sunshine, more than 275,000 Floridians are projected to leave the state in 2025, marking the steepest exodus since the 2008 crash. The reasons all trace back to the wallet. Home insurance premiums topping $12,000 a year, mortgage payments that have doubled since 2021, and sale prices plummeting by as much as $75,000 have left entire communities caught in a downward spiral. The numbers tell a story of collapse. Miami-Dade is expected to lose over 67,000 residents, while Broward and Palm Beach together are set to shed more than 33,000 people. Pandemic-era home prices that once soared 60 to 80% are now sliding fast, down $40,000 to $75,000 in cities like Cape Coral and Naples. The statewide median price sits at $412,734, a 4% decline year over year, the sharpest drop since 2011. And for anyone holding a mortgage, the math has turned brutal. That $350,000 loan that cost $1,475 a month at 3%? At today's 7% rate, it's over $2,300 a month. That extra $825 isn't just inconvenient, it's pushing families into financial ruin. But homeowners' biggest burden isn't the mortgage anymore, it's insurance. Statewide, premiums have spiked to $3,023 annually, a 34% increase in just 1 year. In coastal hubs, bills routinely exceed $8,000 to $12,000, rivaling the mortgage itself. In Miami-Dade, some households report insurance bills topping $15,000. For retirees or anyone on a fixed income, these numbers are unsustainable. The market is drowning in listings. Over 177,000 homes are now for sale, a 34% surge year over year, more than double the inventory of the entire Northeast. In Cape Coral alone, 12,000 homes sit unsold, forcing desperate sellers to cut tens of thousands off their asking prices, offer cash incentives, or even pay closing costs just to attract buyers. Investors, once the safety net propping up prices, are fleeing. Institutional purchases that made up 25% of sales just 2 years ago now account for less than 6%. Rental yields have collapsed. Rents in Palm Bay are down 12% in a single year. Short-term rental markets in Punta Gorda and Cape Coral, once red-hot, have cratered. Homes bought for $675,000 at the peak now struggle to fetch $500,000. And the insurance crisis isn't just about rising premiums, it's about survival. 6 major insurers went bankrupt in 2022, forcing more than 800,000 homeowners onto the state-run Citizens Property Insurance Corporation. FEMA's updated flood maps have reclassified nearly 89,000 Broward County homes into mandatory flood zones, leaving families with no choice but to buy additional coverage. In Miramar, over 25,000 properties were reclassified overnight. In Pembroke Pines, another 22,000 homes face new flood bills of $1,500 to $3,000 annually, on top of soaring property insurance. Families that never saw a drop of water near their homes are suddenly being told they live in high-risk zones. Condo owners face an entirely different crisis. In Pompano Beach, prices have fallen nearly 8% in just 18 months, but the real pain is in special assessments. Under Senate Bill 4D, owners in older towers are being hit with bills of $20,000 to $80,000 per unit to cover structural repairs, while monthly HOA fees climb past $650. In Fort Lauderdale, the median condo now lingers on the market for 93 days, more than double last year. Across West Palm Beach, Port St. Lucie, and St. Petersburg, condos that once attracted out-of-state investors now come with a warning label. mandatory reserves, ballooning insurance costs, and hidden assessments are pushing carrying costs well above $1,300 a month, even for modest units. The hardest-hit markets tell the same story. Cape Coral leads the nation in price declines, with home values down 11% in 2 years. Nearly 8% of homeowners are underwater, the highest rate in America. Lakeland now has the highest foreclosure rate in the nation, one filing for every 172 homes. Palm Bay is drowning in over 3,200 unsold new builds, with builders slashing prices and offering cash incentives, yet still struggling to find buyers. Punta Gorda's condo market has dropped over 11% year-over-year, the sharpest condo decline in Florida. Four forces are driving this collapse: the insurance catastrophe, the affordability squeeze, the investor exodus, the inventory flood. Each is devastating on its own. Together, they're rewriting the rules of Florida's housing market. And the fallout isn't staying in Florida. Warning signs are flashing in Texas and Arizona, where inventory is piling up, listings are sitting unsold, and sellers are slashing prices. In Austin, Dallas, Phoenix, and San Antonio, the same cycle is beginning to unfold: overbuilding, higher rates, and a growing affordability crisis. For buyers in 2025, leverage has shifted. Price cuts, seller concessions, and negotiation power are back on the table. But owning in this new era isn't just about getting the right deal, it's about surviving the true cost of ownership: insurance, taxes, flood coverage, and hidden assessments that can easily add $800 to $1,500 a month. Florida's pandemic boom has gone bust. What remains is a market correction unlike any other, one driven not by speculation alone, but by the collision of insurance, affordability, investor retreat, and oversupply. The question isn't if Florida's market will recover. It's how much damage communities will endure before the slide finally stops. South Florida's housing market crash. Summary and recommendations. Summary of the crisis. South Florida, long known as a magnet for retirees, families, and investors seeking sunshine and steady appreciation, is now experiencing its sharpest housing downturn since the 2008 financial crash. The region's real estate boom has flipped into reverse, with 15 cities across Miami-Dade, Broward, Palm Beach, Lee, and Collier counties leading the decline. The crisis is defined by four converging forces: skyrocketing insurance premiums, collapsing affordability, investor retreat, and a flood of unsold inventory. Together, they have created conditions where housing costs far outstrip local incomes and market activity has slowed to a crawl. Insurance catastrophe. Florida's property insurance market has become unsustainable. 6 major insurers went insolvent in 2022, leaving the state-run Citizens Property Insurance Corporation as the insurer of last resort with more than 800,000 policies. Premiums have surged an average of 34% year-over-year. While the statewide average now sits at $3,023 annually, coastal homeowners are facing $8,000 to $12,000 bills, and some Miami-Dade households report annual costs exceeding $15,000. FEMA's updated flood maps, effective July 2024, reclassified nearly 89,000 Broward County properties into high-risk zones, instantly adding $1,200 to $3,000 flood premiums for tens of thousands of families. Affordability squeeze. Home prices soared 60 to 80% during the pandemic but have since begun sliding downward, by $40,000 to $75,000 in Cape Coral, Naples, and North Port. The statewide median home price is now $412,734, reflecting a 4% decline year-over-year, the sharpest since 2011. Mortgage rates have doubled in 3 years. A $350,000 loan that costs $1,475 per month at 3% now costs $2,300 at 7%. That extra $825 per month is pushing out first-time buyers and straining anyone who bought at the peak. Investor exodus. Institutional buyers, who once made up over 25% of sales in hot zip codes, now account for less than 6%. Rental yields have collapsed in Palm Bay, Punta Gorda, and Cape Coral. Average rents are down 10 to 12% in a year, vacancy rates are rising, and short-term rental markets are in free fall. Properties purchased for Airbnb conversions at $675,000 during the pandemic are now struggling to resell for $500,000, forcing investors to slash prices by $100,000 or more to exit. Inventory flood. Active listings surged 34% year-over-year, with more than 177,000 homes on the market statewide, double the inventory of the entire U.S. Northeast. In Cape Coral alone, 12,000 unsold homes are dragging down prices. In Naples and North Port, price cuts of $40,000 to $75,000 are now routine. Sellers who purchased at peak valuations face impossible choices: cut prices, offer concessions, or risk foreclosure. Cities hit the hardest. Cape Coral/Fort Myers, ground zero of the crash. Prices down 11% in 2 years, nearly 8% of homeowners underwater, the highest rate in the nation. Lakeland leads the country in foreclosure rates, with one filing per 172 homes. Palm Bay, drowning in over 3,200 unsold new builds. Builders slashing tens of thousands off prices to attract buyers. Punta Gorda, condo prices down over 11%, with investors unloading properties at steep losses. Pompano Beach and Fort Lauderdale, condo owners face ballooning HOA dues and special assessments of $20,000 to $80,000 per unit. Miramar, Pembroke Pines, Hollywood, and Dania Beach, hit hardest by FEMA's flood map changes, adding thousands in new insurance obligations overnight. Wider ripple effects. The crisis is not confined to Florida. Warning signs are emerging in Texas and Arizona, where inventory has surged, listings sit unsold for months, and sellers slash prices. Austin, Dallas, Phoenix, and San Antonio now face similar affordability and oversupply challenges. This suggests South Florida is not an isolated collapse, but the leading edge of a broader Sunbelt correction. Recommendations. For homeowners: audit all costs, don't just focus on mortgage payments. Add up insurance, taxes, flood coverage, and HOA fees to know your true carrying costs. Negotiate with insurers. Shop aggressively, explore discounts, wind mitigation, flood zone reevaluations, and check eligibility for state-backed Citizens Property Insurance Corporation. Stay ahead of assessments. Condo owners should demand full documentation on reserves, structural reports, and upcoming repairs to avoid sudden five-figure bills. Consider timing the market. If your costs are unsustainable, selling sooner may preserve more equity than waiting for further declines. For buyers: leverage market power. With listings piling up, demand concessions, seller-paid closing costs, mortgage buydowns, or a year of HOA dues. Scrutinize hidden costs, request full breakdowns of insurance quotes, HOA budgets, and flood zone classifications before signing a contract. Prioritize stability. Favor properties in communities with strong reserves, newer construction, and documented compliance with safety and insurance standards. For investors: run updated cash flow models. Factor in higher vacancy rates, falling rents, and insurance hikes. Avoid properties that produce negative cash flow under realistic scenarios. Diversify markets. consider stabilizing markets outside Florida's coastal hotspots, or shift focus to regions with stronger wage-to-housing cost ratios. Be patient, bottoms take time. Rushing into discounted properties without considering carrying costs could mean catching a falling knife. For policymakers, insurance reform. Stabilize the insurance market by attracting private carriers back into Florida through incentives, stricter building codes, and reinsurance support. Flood zone clarity. Improve communication and phasing of FEMA flood map changes to avoid sudden financial shocks to homeowners. Affordable housing initiatives. Tie state-level development incentives to affordability metrics to ensure new construction aligns with local wage growth. Foreclosure mitigation. Expand foreclosure prevention programs and homeowner assistance funds to slow the cycle of distressed sales driving down community values. Conclusion. South Florida's housing market has entered a painful correction defined not by speculation alone but by the collision of insurance instability, affordability collapse, investor retreat, and a tidal wave of inventory. For many families, carrying costs now rival or exceed incomes, forcing difficult decisions to sell, relocate, or downsize. While buyers in 2025 may hold more leverage than at any point in the past 5 years, survival in this market requires vigilance. The path forward isn't about chasing bargains blindly, it's about full cost awareness, disciplined negotiation, and long-term resilience. Florida's housing boom has ended. The next chapter is about navigating the fallout.